recording and let you guys take over. How was Tuesday?
All right, thank you, Scott. Interesting week. We'll talk about that. Hello, Andy. How are you?
Hello, Steve. Hi, Scott. Hi, everybody.
All right. So, yeah, it's actually been 2 weeks. We just got off another big successful test drive. I'm sure a lot of people know what that is by now. And so we're back to our normal schedule. And looks like good pent-up demand in the audience. And we certainly have pent-up content to get to for sure. So we'll get through the requisites here. Just a reminder, we're a software as a subscription service company. And Andy and myself are 2 users of it, longtime users and also employees. But we might give some opinions out on things, but none of this should be construed as financial advice because we're not properly licensed to do that. And we're not saying it is either. It's just a couple of opinions. All right, as I said, we've used it since the beginning, pretty much. Myself and Andy seen a lot of changes, and we know it's not something you learn overnight. A lot of impatient people, and I was too when I first wanted to learn to trade, but I can tell you patience is a virtue. And just sitting down and trying to absorb this program, patience meaning don't expect to learn it overnight or 2 nights or 3 nights. Give it a week or 2 and you'll start to really gel and see how you can make this program work for you to help drink from the fire hose that is our market, whether you want to trade low float, high short float stuff that just is all over the map, or if you want to slow things down and be a swing trader and have a second job and slow things down. Trade Ideas can help do that for you. You just got to learn how to try and custom tailor it. So we've got a lot of ways to help you do that and shorten the learning curve. Primarily is Barry's room. The live trading room is open pretty much every day. Maybe the last hour it starts to close up, as there's really no reason to be trading the last hour anyway. I don't think. But a lot to be learned there. You don't have to be a subscriber. It's a free room, and he always reminds us to send people in there for help, for platform visual support. We can't do it over the phone, but we can do it in Barry's room, and we can also do it in these webinars, and we can do it at the daily support session, which is our next slide. There it is, daily support session. Every day at 12 Eastern for 1 hour. The YouTube live feed, which is basically mirroring Barry's room, we give him a break, and one of the 5 of us here take over, soon to be Chris. We got 6 of us now. I shouldn't leave Chris out. He's our bench utility guy, fills in when we need to. So let's just say that myself, Andy, Jamie, Sean, Michael, and now Chris. Got 6 of us here, and so we are taking over the 12 p.m. Noontime support sessions. Every day you should be coming here if you have something you need support with. It's much better than going to the chat room or the live chat, I should say, or creating a support ticket. We can come and interact with you in real time and show you a visual. You won't be disappointed, and so that helps shorten the learning curve as well. And again, just this morning I was talking with my friend Brian Shannon, and he was saying, hey, how's the auto trading going over there? I said, well, I don't really know. I don't auto trade. You know, you can talk to Michael about that. He's the expert. Andy and I, we prefer the human touch, and he agreed. It's just the human can take all the nuances of a trade. Now, that's not to say the machine can't help us. The man and the machine working together here, our machine, our scans, our AI, whatever you want to do, whatever you want to call it, that's the technological side, the robot side, the machine side serves up a great idea, and then the human is better at taking it over again, from what Brian reminded me this morning. Once you're in a trade and you're taking in all the information that's coming in real time, nothing beats the human brain for the nuances that it can look at. And we are going to talk about some of those things today for sure. We're going to introduce some new things. So in keeping with tradition of the format here, I've got some good stuff to talk about. The market recap, what's going on out there. A pretty decent day. The AI gods were shining on us today on a Tuesday, so Andy can show some good trades over there, keeping in, like I said, the vein of good trade selection and entry from the machine, and then trying to use the human touch to maximize those trades. Always works out better. And then the trade of the week, we've got a few pent up because, as I said, it's been 2 weeks, so we've actually got 3 trade of the weeks to talk about, and nothing really bad to say about any of them. Ride is interesting. We'll talk about that one, of course. That's the feature for this week. And then we're going to introduce the Magic 130. I'm going to present something to you that I'm actually now using in my my method. And time permitting, we'll go for about 45 minutes. Chart requests and alerts. If there's anything we want to set as an alert or any chart request, we can take a look at those at that time. So for now, we'll save that slide for Scott. Let's get started. And we'll bring up the S&P because that is the benchmark for everything. And yesterday, if you were tuned in to Jamie's webinar, let's get it just right. There it is. That's what we looked at yesterday. And I said, boy, there's just nothing at all bearish about this. This looks like, pop up and the sideways, bird in the hand, ready to take flight, just looking for a reason. And wouldn't you know, last night, once the market closed, futures gapped up and market started to take flight again today. Interestingly enough, some energy names, boy, the airlines really took off. Funny side story here. I don't want to get too off track, but a woman asked me in, I forgot her name, in the noon session today, what I thought about Delta Airlines. She was short. And I said, well, to be honest with you, I was just looking at the airlines yesterday and I was talking myself out of it because of the travel and the COVID and I just didn't see a reason, but the chart was screaming the airlines want to rip, and boy did they ever. And I hope she got out of her short midday. But the point was, airlines had a big day. Oil service had a big day. There we go, big day. But the general market overall, it wasn't so much tech weighted today. It was much more broad based. So there's the S&P looking like there's just nothing to stop it again from all-time highs, just right around the corner. A beautiful sideways action, a little slingshot to the downside, pulled back and drove higher today in the NASDAQ. Beautiful, but the real story for the last week and a half has been this guy, the one that we've been laughing at and making fun of for the last year, never really being able to get back to its all-time highs, which is now above its all-time highs and looking extremely strong. So if you've been paying attention to what's been moving lately, a lot of stuff. Electric vehicles have been all the play. Not that one. There we go. NIO, and we did that one. What's the other one? Well, we'll get to right in a second, but I wanted to get some, there we go. Alternative energies, BLDP, plug, F-cell, just stuff was going crazy all over the place. And some of it still is, but these are the small caps that we get into silly season. And silly season is something that Andy and I have noticed ever since we started trading. And I think what's happening is a lot of people are off this week. That's why our attendance might be up here as well. And when people are off and they're interested in the market, they're logging into their Robinhoods and their E-Trades and their Ameritrades, and they're participating. And a lot of people that do that are focused on stocks under $10, under 20, and the hot names. And couple that with an election that we just had, I think there's a lot of attention on alternative fuels, energies, and in transportation. So these things have just been off the chain, off the hook. I'll have some more to talk about that, but we're talking about the general bigger market picture here. IWM, the Russell 2000, has been where all the action is, and geez, who knows, it could continue again tomorrow. There's just something about the Monday, Tuesday, Wednesday of Thanksgiving week every year. I think people are off. You just have crazy small cap stuff popping like popcorn. Am I wrong, Andy? I know you're in agreement over there.
Oh yeah. Usually the market in general this time of year through the holiday season.
All the favorites.
But, yes.
Well, speaking of favorites, let's just type in that favorite, Tesla.
Mm-hmm.
So this is the granddaddy, of course, of the alt vehicles and stuff like that. So that's where the focus has been. But again, to quote something I've said often, there's just no bear case to be made. Especially if you were trying to short the airline states, everything looks very bullish, ready to just grind higher for whatever reason. You don't have to think too hard about it. But as I mentioned yesterday, we went from a possible most obvious double top ever to breaking out of that wedge, and now we've consolidated on the breakout ledge of that wedge, and we're moving higher, led by, finally, once and for all, the small caps, interestingly enough. So got a lot of other stuff to talk about. Anything else you want to add on the general market picture there?
No, Steve, there really isn't. I mean, you said it all. It's just everything looks pretty bullish, and really nothing to add.
All right.
You pretty much said it.
There's steel. We'll talk about that, of course, too. Go ahead and take it over. And
all right.
Looks like the AI was hooked up in the right lane today.
You know what? Yeah, I'm excited about the AI. Now let me steal it from you here. And there we go. And I'm gonna have some on my laptop here, so I'm gonna have to minimize the questions panel real quick. All right, guys. So what I have on the board here is all the trades from the AI today. These are all the strategies that came in into play today. And you may ask, how do they come into play? Well, they come into play by having a certain winning percentage and a certain profit factor. They got to meet certain guidelines to make the cut, if you will. Okay, so we had quite a few strategies to make the cut, and Holly was pretty active today. This is, you know, it seems like over the last maybe 6 months, they've been averaging around maybe 10 to 12 a day, but now, you know, let's see, well, 17, not all that much, but very impressive. And typically I like to focus on Neo, but I'm going to ask you guys maybe to keep an eye on all of them. And the reason I want you to do that is because we made some changes right at the start of the test drive, and there's some changes and not so much the strategies, but more so of the risk parameters and maybe some hold times and some different calculations in there in our algorithms. And boy, it's made a difference. So you can see today and yesterday was really good. So I want you to keep an eye on not just Neo. I think this is a time you might want to have them all up and looking at some of the trades coming through because of these changes that we've made. I'm seeing so far so good. So I'm going to knock on wood as I say that, just because, you know, I know the market can always throw a kink in any algorithm or strategy, but it's really been performing. And look, it's not all longs today either. It was some shorts mixed in there that did very well, and that's encouraging. So let's see, if you're looking at my screen, you're going to see different share sizes. Okay, guys, if anytime you're looking in the channel bar right now, it's only calculating 100 shares. If you bought 100 shares of every alert that came through, it's going to give you what the P&L would be. So if you are looking at my blotter right here, and I'm sorry guys, I'm on my laptop, I don't have the Epic pen, but hopefully you can see right there the moderate profit was 1,572. This is based upon a stop loss of, a risk of $200 based on the stop loss. So that's why you see different share size as you go down my thing here. Let's take a, how'd that happen? No, let's take a quick look at some of these trades. You know, the top two, thought this was pretty interesting. The top two winners for the day were a strategy called on support. And I like stuff like this because it's contrarian, okay? You're buying stocks that are strong, they pulled back, and there was a beautiful buy right there on WDC, followed by a nice green bar and some really nice follow through. Look at the daily chart, okay? We had a nice little breakout there on the daily, even though if you go back, is some congestion over here. It's still about a 3-month high there, so not bad. Take a look at EQR, another one on support. Very similar looking, gap up, yank down, and boy, there's your tag, no pain trade. Even if you didn't get it, you know, you've traded manually, you could probably reach up and grab it, you know, 5 cents higher, but look at that action after the alert. Just beautiful. What is that? Probably 7 or 8 bars in a row. That's very strong. And the next one was a short. So we threw some shorts in here as well. Downward momentum right there. Now, you know, you had some immediate downward momentum followed by a bounce back, which is not, you know, uncommon in bullish markets. You know, it's very, very difficult to short, you know, bullish market. But if you did hold on to that, got nowhere near the stop, and ended up paying for you in the long run. But something else I want to that really excites me about today, I want you to look at the difference between conservative profit and moderate profit. Okay, that's telling me that we set these whatever we did, whatever Michael did, his magic in the background so far, it's looking pretty good. Some of these conservative profits are a lot more than what they've been in the past. Okay, so we're not taking the profit save algorithm kicking in too quickly to this point. Okay, this, like I said, this can change, but I'm real encouraged when I see this conservative profit. As a matter of fact, let's go over here to the AI strategies window, and we're going to click on conservative was 1324, moderate was 1572, so very close there. So a great trade all around. I'm not going to go through here. You guys can do that on your own. Can pick through these. but a great day. You can see the number of winners versus the number of losers just with your naked eye there. Great day, Steve. That's about all I have to say.
All right,
But
go ahead and kick it back. I'm going to pick up where somebody mentioned, who was it? Wendell, you are correct. Wendell says, you know, it's all this positive talk, isn't that a sign of a possible top? And you're right, and it actually reminded me of a point I wanted to make, and I would never use the word easy when it comes to talking about trading in the same sentence. But this last week and a half with these small caps working, and if you were on top of them and have recognized them, I would say that trading probably doesn't get much easier than it has been. It's not easy, but it doesn't get much easier than it's been lately. And to say that, and I know Andy will agree, and Brian agrees with me too, I speak with him all day long, when it starts to get this easy, be careful, because sometimes a nasty change in the winds can come when things kind of blow off on the upper end of euphoria on the easy end. So yes, Wendell, you make a great point there on the psychology of mass market trading. Be cautious when things start getting that easy. Now, I would say that probably portends more for the IWM than it did for the SPY, but we'll see. All right, so I'll leave the questions there to Andy, and I'm going to travel back 3 weeks because we had never met prior or post the first trade of the week call 3 weeks ago, which was Harley Davidson. And I want to just kind of look at this here. This is a time machine trade. We're back on November 6th. Going into the weekend, this is what I saw going into the weekend. This is almost textbook what's in our swing trading ebook when I talk about something that had beautiful earnings, gave back some but not all of it, and all of a sudden the price gets forced higher by the rising 10-period moving average, and these are beautiful entries. The funny thing about this trade was the way in which it evolved. It evolved the very next day. Here's Monday, and I'm going to just draw, you know, the entry was right around here, I believe, probably around, we'll call it 34, I think. Giant gap up, but then it's, for whatever reason, then it slammed down into the entry point, bled through a little bit, and then kind of gave us a weird close. The following day, it popped right back into action. Wednesday gave us a beautiful test and a bounce off the 10-day. And then a little bit more test here. We talked about this a couple weeks ago, trying to tag those, run those stops out. The two lows back there, pretty tight. Well, the Thursday of that week bounced off, put a nice little wick in, and gave us a nice, hopefully, heads, the coast was clear look into Friday. This would have been Friday's candle a week and a half ago. So hopefully this put this on your radar. The stop in this trade was to never let the trade break the 20-period moving average, which it did not. So this trade was intact, and hopefully it was on your radar, because as we move forward now in our time machine, it just got easier and easier all the way into today. So we don't calculate past that Friday that we looked at. So it was a small trade in the green when we calculate our trade of the week performance. But boy, if you had kept this thing on your radar, there was really no reason to ever get out. That was a trade of the week 3 weeks ago. As we looked here a moment ago in our sector analysis, this is the steel sector. And 2 weeks ago, you may recall our trade of the week was, oh, no, let's try this again. We've already given it away, but the trade of the week was, actually, I've got it right here. Let's just do it this way. There it is. All right, there's our trade of the week, that arrow, looking at that beautiful pullback in a strong sector. I'd been noticing this SLX, the steel ETF sector, had been very strong when the rest of the market was kind of doing not a whole lot. A beautiful pullback after a false breakout above $9 there, 1, 2, 3, fourth day, put in a doji right on the moving averages. And then Friday of that week, a nice little reversal candle, green, looked like a very safe entry. The steel sector strong, really nice looking setup. And then we move forward. And then, of course, we hit today. Something about this week, steel is really in fashion. I'll talk about X in a minute. But really nice. No reason to get out of this one, and absolutely never a moment of pain either. Now, there was a bit of a gap up there, but I think it was so close, it really wasn't that bad, not too much of a gap when you consider, look at that, about less than 10 cents. And then no reason to get out. If anything, I sold the CLF that I was in today in a third account that I'm now managing. Got too many tabs open during the day, but That was counteracted by a horrible exit in X, which I'll get to in a minute. So that was last week's trade of the week. Hopefully when they do this well, both hog and CLF, you're taking a third off the table, a half off the table when you can. That's how I like to do it. Andy likes to do it. And then let that last little 20, 25% trail and just let it slop around and do whatever it does. Which brings us to this week. And this week was very different. As I said, we'll go back to the drawing here. Right, this is a different week. We're going to turn up the volatility more than usual because this is a new issue. And it's not much data to focus on, so it's not on any of our scans. This was purely out of concept of the fact that electric vehicles were going absolutely nuts going into the weekend, and it just felt like Ride, Lordstown Motors, which is an interesting concept. You should look up their technology. There's no drivetrain. All the engine compartments are in the wheels themselves, like a smart skateboard, and they actually boast the lowest amount of parts on an EV vehicle out there, but they're still kind of relatively under the radar. But so we focused on the 15-minute chart with that beautiful wedge developing. And so we're essentially just kind of leaning on the silly season here and hoping for some follow through using that sector and hoping that people would come in and find this story attractive. So your office is 5 miles from Ride. Very cool, Bullseye Trader. He probably knows a lot more about Ride than I do in terms of that culture. So yesterday, the trading gods were nice to us and gave us a perfect entry, pretty much right where it was called. And then, it was looking pretty good yesterday going into midday, and then we got sloppy. And this is going to be a good transition into what we're going to talk about next. All right, so there's that moving average I love to hold. And I thought, oh boy, it's losing that moving average. Oh, now it's underneath it. All right, we're just going to play the game of slop. Okay, I get it. We're not going to follow through yesterday. Got it. Gap up today. I thought maybe this was going to be the perfect gap up follow through day today. We gapped up and immediately just crapped, and was not happy about that. But we bounced, and we bounced back, and we captured that line again, and then we gave it back. So there's just a lot of slop going on in this trade right now. A little disappointed. I would have liked to have seen it follow through, but again, these new issues, they're like a knuckleball. You just really can't judge what direction they're going to go, and they can be very volatile. The downside stop, again, nothing changes. If we look again, it's just the low end of this pivot here. There's that $25 level right there. We'll give it 25 cents a wiggle. So, roughly, we'll call it right about here. That's looking for our, that's roughly the stop. So we're still very much in play here. If anything, we're right back to the entry point after hours, especially. So that was the reason behind that trade. Now I want to talk about how to manage it. Andy, you might notice this blue line on my 15-minute chart. I have never had anything on my 15-minute chart other than my 10 SMA. And I remembered, again, my friend Brian Shannon reminded me that let's do this. One of the things I was doing was, this is our 10-period moving average, 3, 4, 5, 6, 7, 8, 9, 10, and our 10 SMA is right there. What if, and you guys that have been with me for a while have seen me do this on the daily chart, shift over to a 5, cut that 10 in half and see what's going on in the 5-day moving average land. And a lot of times that will show us incredibly strong momentum. It won't even touch the 10, but it will ride that 5. We called it the turbo line. There it is. Look at that. So I saw this as well. I wanted to mention that, going into the weekend, Andy, I saw that. Mm-hmm. And interestingly enough, I thought, well, what if, because we have all these days where I don't want to get shaken out. Again, I use this 10-period moving average most of the time when I'm ready to take a profit, right? I'll just shift over to Cliff real quick here. Once it broke that moving average, I want it out. And look how it never got back above that for the rest of the day. That's when I like to use this moving average, when something's just been blasting for 2 or 3 days. But if I don't want to get out of it, what else can I use to try and make sense of what might be happening? Well, here's the formula. It's kind of weird. And let me just tease you with this. If you go to configure in our search tab and you just type in the magic 130, look at this. Change from the 130 period SMA 15-minute. Well, what's going on there? Well, let's talk about this for a second here. All right, so I forgot the math, but if we have 6.5 hours a day, 6.5 a day, that's times 60 minutes, right? 390 times 5 days, 1950 minutes. Divide that into a 15-minute candle, and there's our magic 130. That's the 130 period. That allows me to transpose the daily, which I just drew here, and bring it into the 15-minute. Now, let me just give you a couple of examples of where this kind of comes in handy. It's a little sloppy here on this particular one, and I would have liked to have seen it close better. It's a little higher after market, just underneath it. But look at what the IWM has been a strong one lately, right? Look at all these examples down here. The IWM was sure it was getting twisted and all back and forth on my 10, but when you bring in this next layer, I'm going to call it the backstop, right? I really need to see on the intraday 15-minute, I need to see this thing hold, much like I like to see the 20-day hold when the 10-minute breaks, when the 10-day breaks on a daily. I like to see the 20-minute hold as a backstop. Well, on the 15-minute, if my 10-minute's going to break and get sloppy, I like to see this 130 period line hold, the 5-day moving average, whatever you want to call it. We'll just call it the 5-day moving average to keep it simple. Another stock that I'm in, we'll talk about this later, AR. Little washy back there, but it came back and filled the gap and held that 5-day moving average perfectly, bounced higher. Thought that was interesting. I think Plug Power was even doing something interesting on the 5-day moving average. Yeah, look at that back here. It was just really holding that definitively. So I'm just trying to introduce a new thing. It's not something I'm just passing through for weekly content. I'm actually going to be using this a lot more now. I think even DraftKings had, DraftKings was, I think, a good example to, where was that one? Yeah, back in there. There was one to the downside that I liked. Oh, it was AG, it was silver. Look at that. Silver had been under pressure for a long time, and this AG silver name just couldn't fight its way back through its 5-day moving average. So it's another perspective to look at, because a lot of times I use this 10 SMA and it breaks or it gets a little wiggly, and I need another little perspective or another little point of reference. And this has been kind of coming in handy as of late. So see a couple questions coming in there. I don't know if they're relevant, but one of them said ride. Yeah, we got that one already. So that's the 5-day moving average, and that's a simple way to draw it into your 15-minute chart. You just come in here and we go, hang on one second. Oh, my system froze up. While I'm waiting for that, yes, Kevin, the aggressive mode is calculated by not including anything that's stopped out. If something got stopped out in aggressive mode, it won't be accounted for. Okay, so to get this blue line, this backstop that I've been talking about here, is essentially indicators. We would add a new one. New indicators. You would select SMA, okay, and then there it is right there. You do 130, and that value for SMA, you just put a value of 130 in your 15-minute chart, and it'll know to draw it correctly. I had a lot of other examples, but some of them have escaped me. I probably should have wrote more of them down, but I really thought that IWM one was particularly significant in the way it's just been holding lately. We back up even more. It's not a perfect science, but you do find a lot of congestion, and there's some pretty good levels there. Any questions on that?
Well, no, but it's driving me crazy because I can't find it. Do you know where the definitions for the AI strategies are? I cannot find them on the new website.
Oh, on the new website. Oh, yeah. Boy, that's a new one.
Maybe Scott can hear us, and he can drop.
Is it in Traders Help? Is it in Traders Help? I think it might be in that section.
Let me look. I didn't see the Traders Help.
Chris says he knows where it is, so he's in
good
question box. He'll
oh, thank you, Chris.
Jump in there. Chris, I enjoyed the part where Chris talked about how he was toast boy, his first job at the restaurant when he was a teenager. Make sure that toast was buttered. Thank you, Chris. Toast boy.
That's right.
All right. All right, so we're all caught up on questions. So that's what I really wanted to talk about. And because that 5-period moving average, that 5-day moving average really did come into play here on the daily. And so I wanted to start monitoring it on the intraday. And I wish it would have held a little better, but it didn't. And we'll see what happens. All right, so it looks like we're caught up, moving right along. I'll talk about a few of my positions, and while I'm doing that, if you guys want to pop in any daily charts, we can look at those as well, and I can give you an opinion. I have a feeling if you're going to look at some of these low, small cap ones, they're all going to look the same, but we'll see if we can find some value in that for sure. But let me, yeah, okay, thanks, Dave. We'll get to that one. Let's talk about mine first. Now, I want to pat myself on the back, and then I want to slap myself in the face. First one is the pat on the back, as Andy witnessed this. We saw yesterday, we were positioned in clean energy in our 71 degrees little fund account, and we saw the aftermarket, and I pretty much said, well, I'm selling the sucker on the open. There's no way that gap's going to hold. And we did, and we sold on the open. In hindsight, I was pretty happy. But the one I'm not happy about is X. Look at that. I left so much money on the table. I just had no idea that a steel stock was just going to run with that much vigor, something like X. So, you know, I've only got like 20% of it left, and I wish I had a lot more of it, but just goes to show you, you never are really going to make the right move when you think it's right. So got out of CLNE this morning. Happy about that. As I mentioned, also got out of CLF up there around under 11. Ride, we talked about Ride, and you can see that's my average down there on Ride. Just want to see it continue to hold that 5-day moving average. We'll see how that goes. This one is interesting. We talked about X, I still have 20%. This one I found on the A-Table Junior, which is, it's the A-Table. There's plenty of talk about that. There's a copy of it in our swing trade manual ebook as well. But all I've done here, I'm continuing to sort by the short float, but I just capped it at $25 because this is where all the fun is right now. So this looked really nice, and you can see my entry was yesterday and midday, so it was right as it was breaking out of that nice little wedge, just like Hog looked like, you know, that trade of the week 3 weeks ago. And so a nice push today. Now, I'm not in the mood. Again, it broke that 10-period moving average midday, but I'm not in profit-taking mode, so I don't care. I just let it slop around and do its thing. Maybe I'll get another gap up tomorrow. However, you'll notice we've got to look left and keep our eye 5 miles down in front of the plane. If you're a pilot, you got to fly the plane 5 miles down the road. This level up here is coming into play, so I've reminded myself tomorrow in AR, if this thing gets there, I got to take half off the table. So this is a OIH. This is an oil sector play. I think the oil sector and the energy, I'm giving you guys maybe a sector tip here. Keep an eye on oil and energy tomorrow. They might be getting the baton passed to them in some nice rotation. And this AR just looked too nice. Another reason I really liked it is the short float. That's why it came on my A-Table Junior here. The short float is supposedly 25%. And if these people start getting spooked, we might have a day or two of nice short squeeze. And so I really like that one. WWR, I've been in this one, you can see, for about 5 days now since back here, but these buggers dropped a secondary, not a secondary, but a shelf offering, and this was that tiny gap down. It could have been a lot worse. I'm thankful it wasn't worse. I really wanted to see it hold the 5-day moving average here. It's just kind of congregating and loitering there, and we've seen that price do that on a few other names, so no reason to get out here. Now, this is kind of a pick and shovel play for the EV. They mine the rare earth stuff and the graphite needed for some of these batteries. So again, kind of an adjunct play to what's going on there. I've seen these type of looks before. I think there could be some more meat on that bone. You're not going to scare me out of that one. And then lastly, I've been playing with silver. Boy, silver got me up here. I was long back here. It didn't take profits up here when I should have. Let's back out because it tells the story better when I back out. There we go. Let's move this line up here. So these guys got me all excited. I was all happy up here. Didn't sell. I thought, oh, we're on the road to a nice breakout in silver. Horrible gap down the next day. I think I added to it here, and then it just all broke down, and I got out for a loss here. Gave up on it. All right, gave up on it. But now it's turning into like one of those trades that, in hindsight, you see in the trading books when they tell you, you know, trading's so easy. All you have to do is just identify the range. And once you've identified the range, you just play the range like so, right? So
channelingstocks.com.
channelingstocks.com, exactly. I'll drop that A-Table. Don't worry, Rakesh. So this is as simple as it gets. it divorced me for 4 or 5 days. I took my eye off it, and then when I looked down and saw that it literally, we talked about this a few weeks ago, guys. Remember what's the low in this candle? 84. What's the low here? 81. Oh, a 3-cent shakeout, and the buyers immediately reversed there intraday, and you can see my buy tag. Once I saw that reversal, there's my buy tag. Everything else was just a nice slow gravy drip higher. I'll take that closing candle any day of the week, because as now people do their charting overnight, they're going to look at that and they're going to say, oh man, chandelingstocks.com. I should probably not be short this thing, or maybe I should even buy it. Probably a good buy down here if anybody who's looking for something. But the point is, silver and gold have not been that good. So these have been some ugly, ugly charts, especially in gold miners. They're bleeding below the 200-day. So I'm not exactly super proud of that one, but it's a low risk contrarian type of entry. All right. Any trades you want to talk about, Andy, that you're doing since we got time?
The only one I'm really proud about today was I bought YRCW. It's a nice little buy at $5.50.
Yeah, let me bring that up. And I think there's the link for you guys in the chat window, Rakesh for the A Table Junior. So all I know is we have a new package on my doorstep every day. Somebody's shipping this stuff.
Yeah.
They're not last mile shippers. They're first mile shippers. But yeah, there's a great story there, and what we got is a chart confirming the story. So a nice push today. Keep an eye on the transports. Again, what you can do is you can use the trade ideas single stock window to come to the similar tab. And there you go. You start getting all sorts of different ideas in that similar tab when it works correctly. YRCW. It's not supposed to change on me. It did anyway. All right, so let's just do this real quick because we do have a little bit of time. If anybody else wants to throw a chart request in there, we'll do so. But I'm going to focus on the tops of my A Table Junior here, because these are the ones that have the biggest short float. I don't know if I trust this number, honestly, on GameStop. It says it's over 100% short. I don't know. Sometimes those are just weird data points, but GameStop, keep an eye on that for whatever reason. It has left the station. I wouldn't buy it here. I'm looking for things that are consolidating. Now, I did notice Bed Bath & Beyond broke above all moving averages today and actually triggered an alert, but I was doing a webinar. I didn't have time to act on it. I would keep an eye on Bed Bath & Beyond. Let's just do this. We'll just readjust that alert right there. I'm not going to pass out alerts today because I want to keep mine the way they are. But going through here, I'm just looking for something that's been, I bought some of this in my mom's account the other day. It was the smartest thing she ever did, was give me the keys to her account 10 days ago. That one's been moving higher. But again, I bought it back here when it was consolidating, all right? I'm not going to chase that, not going to chase that. And you know, Andy, I had a thought when I was in the shower. That's interesting. That's an interesting consolidation. Let's put an alert on that. You know, a lot of these trades, when I pull these up, they've had a big move, but couldn't I take like a 5-day filter and say I don't want it to be up more than 5 days in a percent? Let's see, 5-day range. That one's been up 32%.
Very good, yeah.
But look, that's still 32%. 1, 2, 3, 4. That's still a giant range. As I go through these, let me look at these values: 21%, 7%, and I'm looking right here, you guys. I use the single stock window. So that one's a tight range. Bobby, Bed Bath & Beyond, 8%. That's rather tight, but it's a higher price stock. I guess what I'm trying to say is I want to find every stock that I pull up. I want them to look like SunPower did right there. And it's hard to do that. So
it is.
It is. I'm spitballing. So the point is, these are starting points. These scans, and they're things to mark up for a secondary point. But I marked that one up. So far we like Fossil and we like Bed Bath & Beyond. AR I'm already in because I liked the look yesterday and I did what I do. I bought it. Wouldn't chase that. Guess, there were some other names. I think some of these other retail brand names, you know, they might start following suit. Fitbit was acquired. That one doesn't do anything. Lithium, there's your stock, Chris. Isn't that, you know, Chris has been playing that one like crazy. It's actually pulled back to its moving average there. That one looks very toppy. I would never buy something that looks like that. And then as we go down the board here, we're getting into the there's Kirkland, another brand, consumer brand retail that looks very strong. Blockchain, Riot was trading that one, got out of it on the open today, as a matter of fact. Yeah, that one was creeping and has been looking higher, but Abercrombie and Fitch, a lot of these names.
Yeah,
So
a lot
what's
of these
Urban
pull back
doing?
too.
What's
Urban's
Urban
doing
doing?
great.
Yeah.
Well, it's just not. Yeah, it's.
You know what?
That's
You know what the penny
interesting
stock
pullback.
players have been playing? Naked. Look at that. Isn't that interesting?
Yeah.
20 cents.
Yeah.
But it's probably bankrupt, and you're probably going to get hosed in the.
Exactly.
I don't know. They're 5 cents for a reason when they get down this low.
Yeah.
I don't want to play that stuff. All right. So as promised, we'll go through a few stocks. Yeah, Dave, I got out of X too soon. I'm going to have to look to re-enter that thing like a fool. Let's scroll back and we'll quickly do as promised, find some. All right, Dave started with microchip. And again, I need to go back. I need to default back to my indicator on the 10 because it's still stuck at a 5. All right, microchip looks pretty solid. It looks like it's, just sneaking its head out of that range. Technology chip player, obviously it's looking kind of like the NASDAQ. Nothing wrong with that one. Nothing wrong at all. Probably wants to go higher. Microchip, we did that one. Did the A-table junior. We talked about GME. I don't know what the deal is. Okay, Morris has a good one. SHLX. And gives us the entry point, which is super helpful, long at 10. All right, so he's long here on a nice breakout, it looks like. Now you've had one, here's a go, pause, go. We ask what that is. It's a perfect example of what a go, pause, go is. Big green day, a day of consolidation, usually a doji, and then follow through, but then it starts to get a little dicey. But you're still hanging in there okay. Let's bring in the 5-day moving average, all right? You're way above that. So you're really far above the 10-day moving average and the 5-day moving average. That's at the point when I start to get into profit-taking mode. I'll tell you what, if it was me, I guarantee you, I would have been probably out right here. That would have scared me out. But luckily for you, if you're still in, you got back above and a tick above after hours. But tomorrow I would play this game. Once something is extended 4 or 5 days in a row like that, I use this 10-period simple moving average on a 15-minute chart to guide or to gauge my early exit, my Irish goodbye, to use a horrible euphemism. All right, GPS is a retailer also. Yeah, Gap stores, how are they looking? Very gappy. Very gappy, but very strong. Cisco, an oldie but goodie, and United traded this. Look at that, hit the 200-day moving average, fell back, hit the 10-period moving average, and now closed above the 200. It looks pretty solid. Nothing really bad to say about Cisco. I think that looks pretty good too. Mm-hmm. All right, we'll do 2 more here, then we'll bring in Scott for Dave. IDXX and AVGO, IDXX. Just consolidating, but I'll tell you what, I'm kind of disappointed that it didn't follow through on that day right there and has given us a slam back down. Let's look at it on our, okay, it's really playing footsie with that 5-day moving average too. It's just not giving us a whole lot to work with here. In vitro diagnostic, $450. Wow, that's all over the place. That thing could go anywhere. It could do anything. AVGO. Much better looking on that one. The old Broadcom getting a little separation from its moving averages. It might come up and peak above that new high and then reverse like some things do. Be careful. All right, I'll do a couple more for Chris and then Wallace, then we'll go EPEV, right? Oh, EPEV. Let's try it that way, right?
Are you talking about XPEV? Or is it?
Oh, maybe I've just frozen. It might be my system freezing here. No. PLTR.
XPVE.
Okay, well, PLTR looks great. XPVE. That's probably the one you were talking about. Yeah, they look great, but they're also extended. Be very careful. They're very extended. Yeah, AMD. AMD looks really good, actually. I like that. That looks pretty darn good. Keep an eye on that. Mm-hmm. It's making noise like it might want to do something. I'd probably just put an alert right there. Something like that. Okay, guys, we're good for the day. We'll bring in Scott with some last-minute announcements. I know we do have a pretty good sale coming up, but thanks for your time and your questions, and I'll turn it over to Scott.
All right, thank you. Yeah, a couple items on the way out. Be sure to grab this ebook before we change it to the next ebook offer, tradeideas.com/earnings. The ebook's got some great ideas on how to take earnings season to your advantage. Also got some cloud links you can plug into your display, to your layout, and use directly. As a podcast, we're gonna have a new episode up before the weekend. Sean has a great interview with one of our new friends, Chris Farley, and that's gonna be worth checking out. In the meantime, just go ahead and subscribe to Trade Ideas Podcast. Just search for that term wherever you listen to your podcasts, add it. You'll be ready to pick up the newest one, and also download the last couple of interviews that Sean did. He's got some good ones in there. There's a code, Fall Savings, if you want to start right now, 15% off your first month or year of Trade Ideas. Hint, there might also be an email going out soon and over the weekend with some Black Friday, Thanksgiving deals too. So stay tuned for that stuff. You can use those codes to either upgrade or start a new subscription. You can find Steve on Twitter at TodayTrader. Also follow us at Trade Ideas and at QuantBot. There's some other handles out there you can find too. And Trade Ideas Pro is the Facebook handle to follow and share all our stuff with your friends. And if you do have any questions, if you're missing any links, just send those to info@trade-ideas.com and we'll help you out with that. All right. Thanks, everyone. Thanks,
See you next time.
Thanks, Andy. Thanks, everyone. Have a good one. We'll get that recording up later on.